Lately, I've been talking an awful lot about insurance, and I wanted to share something with you guys about insurance riders and how they can be a valuable addition to your policies. If you're not familiar with what a rider is, an insurance rider is a little bit of extra coverage, usually for a small additional cost that'll cover very specific things. For instance, I've been talking about renters and homeowners insurance. You can get earthquake coverage put on. You can either get a earthquake policy, or you could get an earthquake rider added on to an already existing homeowners or renters insurance policy. You can also get extra coverage added on for a home business. If you are running a business out of your home, then maybe you'll need some extra coverage for some specialized equipment that wouldn't otherwise be covered under your policy. Might also be able to cover like loss of use of your business as well if something were to happen. I was thinking specifically of like if you're displaced from your home, like I talked about in a previous video. You can also have scheduled property rider. And usually you would get this if you have something that is more expensive, that exceeds the dollar limits of the base policy that you might have. Again, I'm thinking of renter's insurance, but we also have, my family has an additional rider on our policy for a couple of items that would be challenging to replace. Now, I've been mentioning a lot about renter's insurance, and one of the things that I talked about in one of my other videos was pet damage. Well, you would need a pet damage rider, actually, in order to have any damage that your pets might cause or any liabilities that you might be held accountable for as a result of your pets. Usually renter's coverage in particular does not, the basic form does not itself cover pet damage. So something to keep in mind, because I was referring to it pretty heavily, and that is something that I did not recall because it has been 27 years since we've had any sort of renter's insurance. Now, homeowners coverage, okay? Something that you may want as far as homeowners coverage is concerned is a water backup rider or water backup coverage. Especially if you've got a water drain located in the lower level of your house, or if you have a sump pump, because during times of heavy rain, things like that, those things can become overwhelmed, or just this pump itself could break down and cause water to back up, and that is not typically covered under your average homeowner's policy. Another rider that you might want to consider for a homeowner's policy would be a lawn and garden rider. And you might think, well, why the hell do I want to cover my lawn and garden? Well, some people do have expensive landscaping that's been done around their home, and that can get damaged due to storms and stuff. And when that happens, it's frequently not covered under your homeowner's policy. In particular, if a tree gets damaged due to a storm like a heavy wind or an ice storm, we had that happen around here, and yeah, that's not covered. So if you have to have that damaged tree removed, that can start to get expensive, as some of my friends have found out. All right, moving on. In life insurance, I spoke about life insurance in a previous video as well, actually a couple of videos. And I mentioned a few riders in those videos, but just in case you haven't watched those videos yet, one of the riders that you might want on your life insurance policy would be a child rider. If you have small children living at home, well, there's not a need to provide individual coverage on them, but you can have them covered under your life insurance policy as a child rider. I'm not wishing anything bad to happen, but sadly, children can pass, and that can be a huge financial burden if you're building up your financial coffers and haven't made some sort of plan to accommodate that. And not dwelling on that anymore, one of the other things that you may want to consider is an accelerated death benefit. This is actually a pretty good thing. So if you get a terminal diagnosis, what are you going to do? Well, you're either going to want to, go check things off of your bucket list, or you're going to want to see if there's any kind of cure that you can find. And one of the ways that you might choose to finance that is through your accelerated death benefit. It allows you to use some of your death benefit while you're still alive for either one of those things. When I was with Primerica, we had a gentleman talk at convention that had found a treatment that was still experimental, and he was able to participate in it, and it worked for him, but he had to travel. I believe it was being conducted in Switzerland. So the accelerated death benefit helped him to be able to do that, and to not be separated from his family while he was trying to do that. So that was a good thing. And one other thing that I also have talked about previously is an increasing benefit rider. You may have seen my video where I talked about inflation. Well, when you are young and first starting out, you don't have the pool of money built up that you want to have, and your need for coverage is great, and there's going to be some ups and downs, changes of jobs, things of that nature, and while you are going through those processes, you are concerned about inflation. You want to know that your coverage is still worth the same, has the same buying power next year as it does this year, and that's what an increasing benefit rider can do for you. Lastly, I'll talk a little bit about life insurance. We just got done talking about life insurance. Lastly, I'll talk about car insurance. Sorry, distracted. Car insurance, sometimes the riders for car insurance are called endorsements, changes, amendments, scheduled items, things of that nature. Well, when it comes to car insurance, there's a few things that you probably already have, but tend to forget about. A lot of people do. Two of those items are rental reimbursement and roadside assistance. A lot of people forget that they have that. Their car will break down. They just call a tow truck, pay for it out of pocket. Meanwhile, they had towing coverage on their car insurance. They were already paying for it on a monthly basis. Another good one is the rental reimbursement. If your car breaks down and it's going to take a while to be repaired, or if you were in an accident, well, then where is this zombie? On the roof, maybe? I'll go up there and have a look. Anyway, rental coverage. You may want to take advantage of rental coverage if you've got an extended repair on your car, or if your car was tore up and is in the body shop. All right, something else that you might want if you are one of those people that has chosen to purchase a brand new car. Two things happen when you buy your car. As soon as you drive it off of the lot, it immediately starts to depreciate. And because of that depreciation, oftentimes you will immediately be upside down in the loan on your car. What does that mean? That means if you drive away and the very next day your car gets totaled, you're not going to be able to just replace that car. They are going to hit you with a depreciation charge on there. The depreciation takes into account natural wear and tear. Well, my car's brand new. No. As soon as you drive it off of the lot, it has officially got wear and tear on it, even if it had a few miles on it while it was sitting at the dealership. So, there's two different riders that kind of come into play when that's the case. The first is a vehicle replacement rider, and it is very cool. I don't know how pricey it is, because honestly, I've never priced it, and I didn't work in car insurance, but here's what I do know about it. It will cover your car for up to 2 years, and it will guarantee that if you total your car, they will replace it with a brand new car. You're not going to have to worry about the suckfest difference between what you owed and how much the car's worth, because boom, you're just getting a straight up brand new car. You would have to ask your own insurance agent about all the, ins and outs and the special things behind that particular rider, but it could be very cool and worthwhile for you. There is another type of rider that serves a somewhat similar function called a zero depreciation rider. Now, that is, as I understand it, it works on cars that are 0 to 3 years old. And in this particular case, it covers... It eliminates the depreciation that you would have to worry about, especially when it comes to parts and whatnot when they're factoring that in. Holy crap, there's another deer. If you watched my stream the other day, I killed all kinds of wildlife in this town. Man, it's just incredible. Alright, let's gut this deer real quick. Okay, and finally, I'm going to wrap up, though. One thing that you might be aware of is first accident forgiveness. So, a lot of people hear that, hey, whenever we have a claim on my insurance, my premiums are going to go up. And yes, that is true. However, you can counteract that with a first accident forgiveness rider on your insurance policy. That means if you have an at-fault accident, you were the one to blame for the accident, or equal blame, whatever. Again, you'll have to refer to your own policy company about all the specifics. But that accident can be forgiven, and instead of triggering the rate increase, you get a mulligan, is what it basically means. Guys, that is just a few of the most popular riders that are available. There are a lot more, depending on what kind of insurance policy you're talking about. And some riders are actually specific to companies as well. So you'll want to check with your agent or with the company that you're using to find out what riders they exactly offer. Crap, I should have emptied my pockets. There we go. And take things from there. But as always, if you've got any questions, you can hit me with those, and I would be happy to answer them for you.